we have the daily price chart for SoFi Technologies Incorporated, stock ticker SOFI. So here we can see that there are some very significant developments that are currently unfolding for this stock. Anybody that's currently trading this stock will need to pay attention to some very important price levels because these will become critical in the sessions ahead. There's a large amount of volatility that is sort of filtering its way through the market at this point. This has really been true for roughly the last 2 weeks. I mean, it's been building for the past 2 weeks. This week, we will have some very significant earnings reports, which will affect not only SoFi, but the broader technology space as well. So here in this video, we will be looking at some of these price levels. Recently, we can see that prices have fallen to sort of near-term lows of $7.11. This follows the $8.06 highs, which were seen during the July 18 trading session. And what we can see here is a bit of a price failure in anticipation of those highs. This has been a market response to SoFi's most recent earnings report. This is significant because, as I will mention later in this video, there are several important earnings reports that will be reported this week. So the possibility for an increase in broader volatility here is absolutely rising, and it is going to be very important for anybody that's holding this stock to continue watching some of these levels that I'm going to be pointing out here. So currently to the downside, what we're looking at first would be a support zone of $7. We're trading very close to here at the moment. We're trading very close to this level at the moment. It is starting to look like, we're only 12 cents away from here at the moment. So, the possibility that we're going to see a bounce from here does seem unlikely because the broader selling pressure, it has been quite substantial. I will be moving down to these shorter term timeframes here in a moment. But I do want to sort of emphasize a couple of these moving averages first. So as we can see here, there are 4 colorful lines on this chart. We've got a blue line here, which is the 200-day exponential moving average. The purple line here is the 100-day exponential moving average. The orange line is the 50-day exponential moving average, and the yellow line is the 20-day EMA exponential moving average. So, these are significant because these are the most commonly watched moving averages in the entire market. Even people that do not spend very much time focusing on chart analysis will still often have these daily moving averages on their price charts somewhere. And then in addition to that, these tend to be the moving averages that are most commonly watched by the financial news media. So if we see, major news headlines today on SoFi, which is very possible given these price moves, given these current price moves that we're seeing to the downside, it is quite possible that we'll hear things like, SoFi dropped below its 50-day EMA, SoFi dropped below its 200-day EMA, things like that. And it is important because if you start to get those, news headlines going, they tend to influence the market, and they sort of, uninspire people or discourage people, from potentially buying a stock. So these are important levels to watch here. Currently, we have already broken through this 200-day EMA and the 100-day EMA. As well as the 20-day EMA. The only exponential moving average that's left here is the orange line that I'm pointing to, and that is the 50-day exponential moving average. So if we're not able to see a bounce here at roughly the $7 mark, what this will mean is that we have broken below all of the major exponential moving averages, as well as this historical support zone, which was posted during the July 25 trading session. And this is critical because this will open up the stock to further declines, which we will sort of outline here going forward. So I will move down to the 4-hour price chart so that we can get a bit of a closer view. This is a daily chart, which is a bit longer term in nature. So, these are significant developments, and we do need to watch these more closely. So, before I get into what these levels actually mean, it's not as complicated as it looks. But I do need to mention the fact that, there are 4 more major earnings reports that will be posted this week. Apple, Microsoft, Amazon, and Meta Platforms, the Facebook parent company, are all scheduled to report earnings this week. This is going to be incredibly important because this could be the most important trading week of the entire year. That might sound like an exaggeration, but it really isn't because, many stocks in the market have been seeing very strong declines over the last 2 weeks. And if we don't see some positive numbers from these four companies, this could put the entire market, in a tailspin here. And many stocks could start to move lower with an increased level of volatility. So this could be dangerous territory here if these numbers do not post in the positive direction. I'm not saying that they won't post in the positive direction, but this is something that we need to be prepared for. So currently, as I mentioned, the $7 level is very important for SoFi stock. If we break below here, we will have broken below prior historical support zones, as well as all of the major exponential moving averages. In addition to that, that $7 level trades very close to the 61.8% Fibonacci retracement of the prior trending move. It's not as complicated as it sounds. Really, all I'm talking about here is this trending move here. You can see sort of this white line here. This is the distance that price has traveled. And if we continue to fall here, we've already fallen below the 50% retracement, which means that the stock gave up half of its gains during this rally. If we see a break below the 61.8% Fibonacci retracement level, that will mean that the stock gave back roughly 2/3 of those gains. And it's very important because that is the most important Fibonacci support level. Why? It's because that's what the Fibonacci sequence is based on. I won't really get into those details, but the 618 retracement is the most important Fibonacci retracement level. And if that area does not work as support, the possibility that the stock retraces all of its gains becomes much more likely. It's not a 100% guarantee, but it just makes it more likely that we will see prices start to then fall back toward these prior lows, which would have come in at roughly 615 during the July 9 trading session. So a lot of this is going to depend on the upcoming earnings reports. We've already seen the earnings numbers from SoFi. The market is not responding favorably. So in my view, the only thing that's going to hold up this stock at this point will be a series of positive earnings numbers released by Microsoft, Apple, Amazon, and Meta Platforms, Facebook. So if we do not see that, we could see an increase in volatility here. And this could have a dramatic impact on the stock itself. It could set the tone for quite a while here, possibly for the rest of the year. So we do need to start. We do need to be watching these developments very closely, and to be watching these price levels here very closely. So here's the current market update for SoFi Technologies Incorporated, stock ticker SOFI. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.